Good morning.
All right, I need to make another pot of coffee. We'll start in, what is that, 8 minutes, 9 minutes?
Wall Street set to gain moderately up, shutdown worries continue to impact sentiments.
Gold surges past $3,900 on safe haven demand amid U.S. shutdown and political jitters.
Pi network price forecast. Consolidation persists as DeFi launch fails to spark investor interest. Eurozone retail sales log marginal growth in August.
Gold rallies above key 3,900 Oz mark amid yen slump. U.S. rate cut bets.
C100 up marginally. Energy, mining stocks rise.
UK construction downturn softens in September.
Oil prices jump on smaller than anticipated OPEC plus output hike.
Pound sterling underperforms U.S. dollar despite U.S. government shutdown.
Mexico consumer confidence declined to 46.1 in September from previous 46.5.
When I switched to Allstate, I saved hundreds. My old insurance company raised my rates, so I started looking around. Allstate made it really easy to switch, and I was able to get better coverage for a better price.
Progressive makes it easy to see if you can save money with a commercial auto quote online, so you can get back to your monster to-do list.
Super helpful.
See if you can save money at progressivecommercial.com.
Thank you.
Oh, the music's over? What do you mean the music's over? I just started it. Jiminy Cricket. Yeah, I guess we got to hurry up. There's only 11 and a half hours to the next news. Almost ready. Almost.
All right. G'day, mate. How are ya? How's your mum?
Dude. What a world. What a life. I'm in love. Good morning. Yeah. All right, come on. Let's get on with it. I guess I have to turn the music off. Hang on. All right. Now I can get going. All right. All right. I think we're ready. Yeah, baby. Yeah. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you can't afford to lose. Anyways, hey man, welcome to my home office. Hey, we have news in 11 and a half hours. Okay, that's a little quiet when the entire United States is sleeping. The dragon is sleeping. So anyways, yeah, well, we still have to...
U.S. stocks may see initial strength on AMD, OpenAI deal. Firm commodity prices point to positive start on Bay Street.
We still have to earn our living, right? So anyways, yeah, well, that's just, those are the cards been dealt. So we have to try to figure out risk on or risk off mood, direction and velocity and all that kind of stuff for these markets. Let's do a quick update.
U.S. stocks may see initial strength on AMD, OpenAI deal. Firm commodity prices point to positive start on Bay Street. Wall Street set to gain moderately up, shutdown worries continue to impact sentiments.
Gold surges past $3,900 on safe haven demand amid U.S. shutdown and political jitters.
Eurozone retail sales log marginal growth in August.
Gold rallies above key 3,900 Oz mark amid yen slump. U.S. rate cut bets. Yeah, we have a female Japanese prime minister, huh? How cool is that?
FTSE 100 up marginally. Energy, mining stocks rise.
UK construction downturn softens in September. Yeah. All right, cool. Got a little bit of news out of the Eurozone. Retail sales, 1%. Really? That's not very good. Well, I guess it's better than negative 1%. Huh? Yeah. Hey, got to look at it a positive way. Speaking about looking at things positively, let me drink last night's coffee. Yeah, that was the issue, by the way, the weird time for today's live stream. This pot of coffee sat outside all last night because I had the entire pot of coffee outside. I was working on my laptop on Traders 2.0, and somewhere around 2:30 in the morning, I'm like, I get it done. But I haven't tested it yet, and yeah. So the good news is it looks like it's done. The second thing is I have to test it and then hook it up. So we are epically close, like 99%. So we should be ready to go 2.0. That was a long day because the evening before I got to the police station at 8 o'clock in the morning, did my ride along part of my police academy training to serve my community. So I rode around in a police cruiser from 8 o'clock till 2 o'clock in the morning on a Saturday night. Got a few hours of sleep and got up and got to work around 10 a.m. after I did all the other things I need to do, like work out and uh, meditate and all these things and eat. So I got working at 10 a.m. and I stayed there till 3 a.m. I took little tiny short breaks to eat, but that's it. Ha ha ha! So that's why I'm a little off today. And so anywho, get ready for something amazing to happen imminently. I'm super excited for us. Okay, trade balance, great. And lots of Canadian data. That's good. Tomorrow, Friday. Okay, tomorrow, Friday. That's it. Pretty much a whole week here. Probably need to watch that cat then, huh? Probably. I would suppose this would be dramatically better. IBPMI, if it's low, US dollar gets strong. But even the opposite dollar gets strong. Just look at the euro though. Maybe we don't have euro there. Like there's no overlap. How interesting is that? And there's no Canadian dollar. Boy, that gets choppy. I guess in that case I would look to go pig, or sorry, euro. I forgot about this glitch, but I don't need to fix it anymore because I rebuilt the whole entire server. So it is already fixed. Just quickly burn through some charts. Big move here. Pound is strong or euro is weak. Take a look at some of these yens. Look at that. Boom! Wow. So I believe the Japanese bond market's freaking out, and we have a new political leader in Japan and a bunch of things, right? Holy smokes. Meanwhile, dollar is weak against Mexican peso. So look at that. Mm-hmm. Good thing, right? Good thing that fits our strategy, right? Remember that we're bulls on yen pairs, right? Hey, DaCosta. Yeah, you just wait one day. Wait one day. Everything changes tomorrow, DaCosta. Tomorrow, I'm quite sure. If it's not tomorrow, it's Wednesday. Maybe I should even just say Wednesday. Just give myself some breathing. But yeah, let's just say that. On Wednesday, DaCosta, everything at TRADARS changes. Every snippet of code changes. And one of the things I'm introducing is different um, subscription levels so that you can customize what you need. Yeah. So to answer your question, um, the but in that case, DeCosta, the course. Do you mean course or group? I mean, the courses are at Investor Bootcamp. It's $88 a year. But if you mean the group, then you'll join the group that almost everybody here is in. What, right? What we call TRADARS Pro. Yeah. The new name of that level is TRADARS Live. Yeah. Yeah. Okay, then that's easy. So, no later than Wednesday, you'll sign up for TRADARS Live, and guess what? It gives you absolutely everything. Yeah. All right. Cool. Anyways, look, I got to burn through some charts here. Let's move on. Okay. Nice and sideways, picking up some yield. That's cool. Aussie just going nowhere and doing it slowly. Yens are just popping, huh? Just popping. Yeah. Well, remember, guys, and I think I've already said this, but we've been bullish on these yen pairs since the third week of September. And so now we're in what, the second week of October, and they're up from 72 to 76, so they're up 400 pips. Well, there you go. You're like, oh, Wayne, well, that has to do with the Japanese election or the Japanese bond market. That, yeah, whatever, dude. It just arrived on time. What can I tell you? There's always something. You have what normally happens plus a catalyst. But it's like a moth to a flame. Silver, silver, silver. Yeah, big what? Look at that, huh? Pretty neat. Gold is doing something pretty nice. Where's my gold? Goldie. Okay. Oh, and by the way, if you guys are worried that I'm going to change too much, um, this page doesn't change at all at Traders 2.0 just because it's so good. But then there are other things that have 100% change. And there's lots of things that I've added, and I have this big list of more and more and more things to add. Yeah, so it's going to be amazing on Wednesday, and then probably throughout the month, or let's say between now and the end of the year, there's going to be upgrade, 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 upgrade. Like Fed funds futures market, oil industry market analysis, real estate industry market analysis. Like, whoa, whoa, what? Real estate? Uh-huh. Oil? Yep. Our new risk gauge is crazy. Right? So all of that is super exciting. Like our new COT report is like, I think it's 40 assets. 40. You're like, Wayne, that is crazy. It's too much. It's overwhelming. Oh, well, you can just click something and it dynamically reorganizes itself by asset class. So if you just want to see Forex, you click Forex and the whole thing dynamically updates. The page doesn't change, the content on the page changes. And it just dynamically then shows the stock and the flow of Forex. Then you're like, show me the stock indices. Oh, show me the commodities. Oh, and it just dynamically creates all that on the fly for you. So now you can get crazy detailed because it's so easy to read. I mean, insanity. All right, S&P. No, I really want a gold. I didn't see it. Did I skip over it? I'm a little slow, having not slept in days. S&P quickly going nowhere at this point. WTI, kind of. All right. Look at the prices, though. 60-ish. Remember when it was up towards 70 and we're bears? Nailed it. Nailed it. And I don't know if you work over the weekend, but there's news coming out of Saudi Arabia that they're increasing production. That's going to drive oil prices down. Yeah, I didn't see gold on it. Where did I must have missed it? Gold. This is page 1. Dow. Is it page 1? Yeah. Oh, there it is. Good. Yeah. So we had this beautiful little drop, and we got ever so close to 4K, and that's what people are watching. Coming up. What do you guys think? Are we going to hit 4,000 today? Well, again, you know how to read implied volatility, right? Yeah. You got two choices. One would be kick it off the moving average. Another would be kick it off the roll reversal. Third one would be kick it off of the implied 1 hour or 4 hour low with a target that doesn't quite get us to 4,000 yet. So it could happen, but based on what happens to gold on Mondays this time of day, nah, we're not going to break it today. We'll get pretty close tomorrow. Now, I don't know what is actually going to happen, but that's what that says. Yeah, this week, but not today. Yeah. What do you think about is it going to pop and drop? There's just massive sell orders at 4,050. Yeah, yeah. Cool, let's do some fundies. By the way, sorry, I've just been consumed for, 5 weeks? Consumed. Hang on. Can anything... So, one of the things that I did is that in our Squawk box, we have this chat so we can communicate with each other. But it's a third-party app that I've integrated, right? So you have to register and all that. And guess what I did? We built one from scratch and hooked it up into the database. So it's now completely native in TRADARS 2.0. So when you log in and it takes you to the Squawk box, it already knows who you are. So you can just chat and, it knows who you are. You don't have to register for a separate thing. Log into this, then log into that. It's completely native, built in directly into our database and into our front-end engines. I mean, if you add up 1,000 of these little nice to have things, it gets pretty significant. Like, okay, that's better. That's nice to not have to register for a third party. You know, it just, oh, it's all built in. Yeah, everything's all built in. Very cool. So millions of little changes. Um, many, like you won't even recognize like our fundamentals section. I think it's going to be Wednesday, Sebastian. Today I'm going to do testing. Tomorrow should probably be refinement, but if testing goes well today, then I can do the refinement today, tweak whatever needs to be tweaked. I've already transitioned, and we had to build all the servers and set up the, you know, I mean, there's a lot of stuff that goes into it. So all the hard work and then all the, you know, grind type work, like setting up all the servers stuff, it's all done and it all works. Now I need to test it, and then if that works, then hook up, hook it up, right? Right? Hook it up, which would be so when you click login, it doesn't take you here anymore. So we're at the point where I'm kind of, I have a sigh of relief because I wasn't even sure this was going to load today. That's why I was working at 3 o'clock in the morning, and it looked like it was up, and I was done. But then the back testing of it, I'm like, dude, it's 3 o'clock in the morning, and I'm dizzy. Right. So anyway, so I'm like, yeah. So anyway, so we're lucky. If it doesn't work tomorrow, I'll be forced to launch it. But there's just a lot of back end database stuff to do today as far as like well, it's going to go from members to subscriptions, right? And all the new stuff is hooked up, but then I have to hook up all the existing people and give them access rights and all that. So anyways, Wednesday, how about that, Wednesday? But if this database goes down, because it's all scheduled, if this database goes down and we don't have it anymore, I'll be forced to launch 2.0 tomorrow. Anyways, Bitcoin. Yeah, hot to go, HOTTOGO. Which is good because, you know, we were scheming and planning on buying Bitcoin a month ago. And I was hoping it'd get closer to 100. I think we got to 105. And now we're at 125. Yo, 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 yo. Hey now. Yeah. Dollar's a little bit strong. S&P kind of waiting. Look at the price on gold. Oh, not quite there at the moment, but that's oil very, very low with a bounce. And this going the wrong way. So, you know, it's not great. Some of these, you know, the daily is risk off, but some of this is risk on, especially when you look at seasonality and stuff. Okay, so this page, almost like I said before, I'd say actually, you know what? Every page is 100% different. So let's look at what we have currently. We know our run, you know, that we have major assets and the direction they've moved on 3 time frames. And we understand the correlation of each individual move, whether that suggests risk on or risk off, and we've organized it here. Okay, great. Cool. So now imagine introducing 20 variables on multiple time frames with weightings and correlation assumptions that are all dynamic. So it's not like if it says 1, then that's good. And if it says -1, then that is bad. Well, that's not very sensitive, right? Well, what if it's up 20% and that's a 1? Or if it's up 1% and that's a 1? Well, it's not the same, is it? So this is very binary, which is, I love it. Like, dude, this is revolutionary. But it's binary. And the new risk gauge is insanely more complicated and sensitive. Yeah. So, like, not just the 210, but the 210 spread, the steepness of the 210 over time. I think on this risk thing too, I've added junk bonds. So, like, for example, what if there's a ton of money going into high yield junk bonds? What do you think that means? Is the market freaking out and looking for safety, or is the market, you know, uber aggressive and trying to deploy capital for greed? I guess let's just dumb it down. If you're plowing billions and billions and billions into high yield junk bonds, is that greed or fear? Let's just boil it down, because I watched Wall Street recently, right? So is that greed or fear? What would you say, guys? Junk bonds. I think YouTube is lagging today. Yeah, I would say risk on too. So why don't we track that? Okay, so we do now. So we track that now. So it's not just yields, it's the shape of the yield curve. And is the money going into the 2-year or the 10-year? Because that also will inform you of if it's greed or fear. And then on top of that, let's add some high yield. Because if you're buying high yield, it's not the same as buying the 2-year treasury, right? Buying a government treasury is not the same as buying junk bonds. So you're like, oh, okay. So now we're tracking all kinds of yield curve analysis, right? Anyways, cool. It's cool, dude. Wait till you see it. Yeah. All right. Gold up. I score that as bad because I still think it's an inflationary risk or hedge, I should say. That's one of the reasons why I own it. Okay, so, well, I own it, but I know that that's not necessarily good. Here's the change over the week, -1. Here's the change over the month, -1. Wait, it's up almost 10% in a month? And it's just a -1? How come that's not like a -3? See, there's no weighting, right? There's no, and then of the 8.74%, we scored a -1. But what if that -1, we found that gold has a correlation with the S&P 500 that is, you know, 0.89, and we could then weight this as a 0.89 relative to the S&P 500 score. Okay, now we're getting to crazy, right? Yeah. So for that, you'd need correlation. Oh, well, you're going to have correlation. The updates every day. And you can watch correlation on multiple time frames. And for you, Lucas, corn, wheat, and soybeans. Mm-hmm. Just specifically for you, Lucas. Scatter plot I have not built, but I don't think it's going to be a problem. Yeah. How about for you other commodity traders? How about Brent crude, WTI crude, natural gas? Mm. I think we have gold, silver, platinum. You know, we're, yeah. So we've doubled the number of assets basically that TRADARS tracks. All right. Cool. So, anyways, I think I can build this. There's some other things I need to do before I can build this, so that's why I haven't built it. But I love this page, so we'll get a version of this, but I think it's going to be different. Now, the display, it's a scatter plot. It's a standard way to do statistical analysis, right? So there's nothing sort of proprietary there, but the scoring, like, well, there's nothing proprietary about how much these assets have gone up or down today. Okay, so that's sort of fixed. This the scatter plot itself is kind of fixed. Like we can build all these. So the biggest thing is the scoring, right? And so the scoring will radically change in dimensional. It's like dimensional scoring, where this is very one dimensional, very binary, as I said. Well, we can improve. So, anyways, get ready for that. Japanese stock market, hot to go, HOTTOGO. That would assume yen weakness. And you have weak yen, weak yen, weak yen, weak yen, weak yen, weak yen. And the only thing that's a bigger mover than these assets is the Japanese stock. So these are up 1.5 to 2%. And the only winner bigger is the Japanese stock market, which is up 5%. Holy schnickerschnick. Yeah. Holy smokes. Huh? So USD yen is up, but dollar's not that strong. I mean, it's kind of. Little bit of strength, but not much. The Asian currencies are benefiting from the Japanese economy, obviously, so they're, they're slightly less weak. Euro seems to be, the European currencies seem to be a little bit weak, right? So you got a weak euro, weak pound, weak Swiss. All right, CAD is no big deal, right? These, yeah, markets haven't even opened yet. Cool. All right. Yeah, so I built a new version of this, I'm pretty sure, but I did it so long ago, I don't remember what I built. So won't I be shocked on Wednesday of like, oh yeah. I think it's just a simple put call ratio. I don't think it needs to be like this. Boo, boo, boo. So what's going on? Asia session is interesting. Tuesday. Got some meeting minutes. Great. So we have the calendar on the Squawk Box on 2.0, and then we have our basically our news scalping calendar that measures vol and direction. Yeah, okay. But we will not have this calendar because I don't like it. I like its simplicity, but I don't like it at the same time. And so I'm going to get you something better. Um, but one of the and I'm not going to do it soon, like maybe next month. But I'd like to create a calendar that's never been created before, or at least radically different from your typical calendar. Okay. And I don't even know what that looks like. So I want to kind of play around with some strategies and design, but I'd like a calendar with a completely different philosophy, something radically different with the focus. Not to the focus isn't to be radical. The focus is to build a calendar specifically for a trader or investor. Yeah, there's interesting things about it, Jim, right? But there's a lot of things missing too, right? And it is kind of ugly, and so remember with 2.0, everything about 2.0 is different. Different technology, different code, different design. Just it's so radical. So for example, this is a page sitting on this part of the server, right? And then there's code for this page that then pulls up the calendar and then puts the calendar on this page. Right? That's why there's two scroll bars. All right, so it's static. I mean, yes, the calendar updates, but other than that, it's your typical web page. TRADARS 2.0, generally speaking, doesn't have any web pages. So imagine we can click things and it all radically redesigns itself based on the instructions you gave it. So you're like, no, 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 just today, or no, 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 just this event, or no, 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 give me a monthly view, or a daily view, or a weekly view, or like I don't know, but we can just and give it sort of maybe it can do alerts, maybe it can do pop-ups, maybe it can tell you all about the like what if you clicked the the Kiwi interest rate decision? What if you clicked that and it opened up a page that somehow gave you analysis about the current economic situation in New Zealand, um, the current trend in monetary policy, um, things that the RBNZ maybe have discussed recently to try to understand what they may do at this event, and then summarize the whole thing and whether we think it's going to be bullish or bearish and whether they're going to raise or not, and where we think the Kiwi interest rate will be in 6 months. Or, I can just tell you it's at 9 o'clock. You see, like we're talking exponential levels of complexity, and it's all dynamic, and you can you can and the page never changes because it's all AI driven. I taught I taught it how to think and how to trade, so we have our own large language model. I mean, dude. So I'm not saying that that's what's going to happen, but I'd like to really I want to go next level, and then when we figure out what that is, I want to go the next level over that. So we'll have to figure out what we want, and then we can have it built. How about that? But we have to dare to think it's got to be incredibly powerful, but yet incredibly simple and incredibly clean. We don't want complexity, we want simplicity, but we don't want basic dumb data. You know, we want smart, intuitive analysis. That's the point. And that's what 2.0 is. It's just insanely higher level. So, as I've mentioned, this page is dramatically going to change. Yet, here's the thing. I don't know why my mouse is grabbing this. My mouse broke? Doing? And my mouse has grabbed it for some reason. There we go. Strange. All right, so we haven't been able to update the COT because there is no COT. Because of the government shutdown, none of the data is updating because they're not releasing the data. Now, this is actually a big challenge for us now that we TRADARS 2.0 talks to how many is it? 13 different government agencies, I think it might be 14. 14 government agencies, many of which are US, and it's designed, if you think about the logic, you don't want to talk to a US government agency every 5 minutes, especially when the data only updates, let's say, daily or weekly or monthly or quarterly. So you just say, okay, don't talk to them about this piece of information until, this time, and then, get the CPI, get the PPI, get the PC, that kind of stuff, right? Or if it's job stuff like, on Thursdays around 8:30 in the morning, talk to the Bureau of Labor Statistics and ask them what the weekly jobless claims number is, and then bring it to our database, right? So we're doing this. So right as we're launching this incredibly complicated process, something unusual has happened that never happens. Well, it does happen, but it's very rare, where suddenly TRADARS 2.0 calls up the Bureau of Labor Statistics and say, hey, buddy, it's Thursday. What's going on, BLS? What's up? Where's the weekly claims? But you know what? BLS doesn't even pick up the phone. It just rings and rings and rings. We're perplexed by this. So now you have to write rules to say, hey, look, if they don't answer the phone, is your phone broken? Is their phone broken? Is the phone line broken? Are they using analog, or are they using digital like mobile? Now you have to test and run reports and try to figure out why, what is the error, analyze it, debug it, and then you're like, oh, there's a government shutdown. But the machines They're not involved in the government shutdown, right? So, anyways, I hope you appreciate like that something as simple as this didn't update is a total shit show from the point of view of our data processing. Because you have to say, oh my God, that something's not right. Yeah. But we have it. We're fine. So anyways, it doesn't update. Now, right now we can look at this and see September 26th. But what we've done on 2.0 is we understand that it's a government shutdown issue. And so it dynamically creates a little sort of, it's not a pop-up, but a display, like a warning, if you will. So it pushes everything down, and there's a big warning here that says, due to the government shutdown, the commitment of traders report from the CFTC is not updating because the data hasn't been released. There's some sort of warning. So you're like, oh, that's why it's not working. And then, of course, once it re-ups, it just removes it. I don't have to go in and add it and then remove it like a web page, like add a banner, remove the banner. No. It just, because it's AI database driven, it just understands and it just does it itself. It's trying to talk to you. Hey, Jim, the U.S. government shut down. CFTC didn't release new data. Just heads up. Oh, well, that's nice. So we don't need to analyze any of this. Okay. Okay. Cool. Oh, I forgot about copper. Yeah, we're tracking copper as well. So this is expanded very, very significantly. So now we're tracking twice as much data. Yeah. And I think we have 15 years of data. Okay. Cool. Now, this is beautiful, but does anyone here ever get lost? Like, you have it, it's beautiful, but you're not quite sure what it means. It's a little vague. You're like, is this good? Is this bad? Well, here's the short. There's less bears. Is it sometimes complicated or overwhelming or not clear? Even though we have it, you still have to interpret it, right? Well, I have two things for you. What if there was a button here where you click it and AI reads all the data for you as an economist, analyzes all the increases in stock or decreases in stock, increases in flow, decreases in flow, has a scoring mechanism to say, you know what? If it's bullish and money went in, or if it's bullish and money went out, there's two different. That's meaningful. Is it becoming more bullish, or is it becoming less less bullish? Is that a peak in the market? Is there a decline in the market? What is there seasonality of these peaks and valleys? And if so, does it mean a, a, a rotation, a seasonal and sort of structured rotation of the asset from being bullish to being less bullish to being neutral to being bearish? Like, what if you could just click a button and it looks at all of this and just gives you the analysis from the point of view of an investor? So it reads it as an economist, all the complexities of flows and flows in and flows out, changes, little details you may not notice, much more complexity than just contracts long and short and their changes, and just busts out a report and says, here are the things that seem to be more bullish and why. Here are the things that seem to be more bearish and why. Here are the things that are sort of contradicting itself and probably should stay away. So look at these and don't look at those. Oh, well, that would be helpful. But also, what if you clicked on gold and an entire page pops up that does big, deep dive institutional positioning and capital flow analysis for gold, and then look at seasonal trends over the last 2 years in the positioning and flow for gold, and then analyzes it, what it means, writes a summary report, and then gives strategic guidance like bullish or very bullish based on all these changes over the last, period of time, over the last week, but going back years and looking for patterns in the stock flow. Oh, I did that for you. Yeah, all this is done. Jiminy Cricket. You're like, what? That's insane. Yeah. So anyways, look, gold's bullish. Yeah, great. Good to know. Good to know. So then you have to say, well, what's changed? Now you got to find gold here. Okay. So now we're doing something completely different, right? Obviously, gold is bullish. 83.4% long. Okay, that's good. Here's the capital stock. Okay, obviously. Right, good. Then we look at this, and gold, we got more bulls and more bears, but the relative change is more bearish than bullish. That's a complicated one to think about, isn't it? It's definitely bullish, but how do you read that? Is it actually bearish? Is it just mixed? And then you have to say, well, what does it do over time? So now you got to look at this. So now you got to do another thing. And then you have to find out, is there gold in this database? Because it's a separate database. You see? So this is dumb, isn't it? It's just another area of the database, and you got to pull this up, and then we don't even know, is it in the database? And is it XAU or is it gold? You see how awesome this is, but at the same time it's dumb? There's gold. Okay? And so you have to do this. What if it dynamically created all this information automatically, because we're not using databases, we're using large language models, and it could just pull up the data because it wants the data, and then think about it, analyze it, write down the strategy, do it clearly, show you the data, prove its work, put in a confidence score, and just give this to you because you want to know about gold. And it's like, well, let me tell you about gold. It'd be like talking to me. I'm like, well, let's take a look at COT. And then I analyze it for you and write a report. But now it's just all, it's a thought process now, not a series of little databases. Like if you looked at this week to week data, think of it as an Excel spreadsheet. And it's huge because it's got all these assets tracked over a year. And in that Excel spreadsheet, it's got for every asset. So imagine you have all the assets, and then it says January, February, March, April, May, June. So week by week by week. And there's a number in there for each week's COT data for gold and dollar, right? And then it says, well, this is what happened this week. And then this is what happened this week. And this is what happened this week. And then you probably have to do that not just for flow, but for the capital stock. So you have to add something for that. So now you have these numbers. And it's just a big, big spreadsheet of numbers, which then you tie, which need to update, but then tie into your visualization tool so you can look at it. So we use Looker Studio, which is Google's data visualization tool, but Microsoft has one, and there's a few other nice ones. This is the one we use. Okay, great. So now you see there's about 3 layers of complexity, and all it's doing is visualizing a table, kind of like this, right? This is just a table. So imagine that's in the back end, and now we can grab this data and plot it here over time. It's just a spreadsheet. That's what a database is basically just a complicated spreadsheet. So what if we didn't have all of that? What if it just knew and then just showed you what it's thinking? And there's no table. We're not just plotting lines. TRADARS is a brain. It's closer to like a neural network, if you will. It just knows all these things and remembers and says, oh, let me tell you what I think about gold. Yeah, pretty insane, right? So we're going to run into a lot of challenges here because this is not going to update. We're going to have gaps in the data. So it will probably break the way that this gets displayed. Okay, because like, well, there's no report. We'll probably go, I think we're going to go 5 or 6 weeks. I think I said the minimum was 3 weeks, but more like 5, right? So so this is going to break the display, and it's going to break the table. Because this, once again, is just a simple database like an Excel spreadsheet and just plots the numbers. So you have to plot in the database the expected, the actual, the expected, the actual, the expected. And then using the visualization tool, you can, and basically a different calculation. So put it this way, you create another column that says add these up by n counts, because you can change how many counts. So add up by how many weeks. So if it's 10 weeks, the n is equal to 10. Okay, look at the last 10 weeks and then divide by 10 and give us the average. So you would just put that as a formula, and it would go beep, 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 beep. Put the average number into the Excel spreadsheet, if you will, and then display it. But if there's no numbers there, you're going to get an error, because it's going to go, okay, week 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 0, 0, 0, and it's going to say error, error, error. Not with our new technology, though. And so there's some cool things to do with this in the new version. Yeah. But what I did, since we're dynamically creating all the content now, instead of having, instead of pulling up jolts, see, now we opened up a jolts page. And then claims. Now we have a claims page. And then you go to NFP. Now there's an NFP page. And then you got to go to employment rate. And there's, okay. So what I've done, since it's all dynamic, all dynamic now, there's just one page. It's not actually a page. It's just, you can ask it about jobs is basically. Now, right now I only have this for the United States, but it'd be like, hey, TRADARS 2.0, what's the employment situation like in the United States? Oh, let me tell you. And I laugh because it's just so funny because it's much more intuitive, right? Like, hey, how's the employment industry in the United States? Oh, well, let me tell you, if you look at JOLTS and claims and NFP and the unemployment rate and wage growth and you analyze all these things over time, this is how you would analyze it. And I would think it's bullish or bearish. And how would this impact monetary policy at the Fed? Whoa. Whoa. So now it's not just like display the image of the Excel spreadsheet sitting in the background in some database. It's tell me what, just like prove your work. Think of that. Your traders is a brain, and you ask it something like, how's the job industry? How's the employment industry in the United States? It will have an opinion. Because remember, I taught it economics and technical analysis. So it's more like, well, let me tell you what I think, Jim, and I will prove my work with the 7 or 8 different things that I thought about, in my opinion. And let me display all of this. So let's look at wage growth. Let's look at, this stuff, but let's look at, what about the COT? What about sentiment? What about monetary policy? Stuff like that. And it all goes into that, and it can just prove its work to you versus you just going from page to page to page and trying to figure it out. I think you might like it, guys. I think I've overwhelmed you. I'm overwhelmed myself. I'm sucking down my vitamin C like crazy. I think I'm going to get sick again. I need, I need to balance. Balance is for losers and ballerinas. Ballerinas are cool. They're tough as man. Yeah. So seasonality gets a lot better. I'm looking forward to really doing some crazy analysis with seasonality. Also, the risk analysis I was telling you, the risk gauges. I'm very excited about really making these things crazy complicated, but easy to understand. That is true, Andrew. Yes. Yeah, I do have Police Academy tonight. Um, Thank you for reminding me. I need to get some sleep, man. But I can't. I got 2.0 to work on, but maybe a nap before that. But yeah, it was great on Saturday night from 8 o'clock and at night, 2 o'clock in the morning. I was on patrol. It's an interesting way to see your city. Yeah, we went everywhere. We saw all kinds of stuff. Yeah, it was great. Huh? Driving through your city at 110 miles an hour. We're just going around, around, around. We checked out the parks. Driving through the park, driving down the golf cart paths. Going behind businesses where it's all dark and dangerous. You know, that was great. We pulled quite a few people over. We backed up other officers. Yeah, it was cool. And of course, lastly, I'll leave it at this. I'm running out of steam, I think you could tell. But um, once again, this is good. We've really improved this over the last 3 years. It's much more sensitive than when we originally launched because instead of using absolute analysis, we do relative analysis, which means every time a piece of data comes out, this changes a little bit. But if you look at it, it's quite binary as well. It's either, it's, I mean, it's not quite, I don't know what you call it, but I, does anyone know what you'd call this? It wouldn't be binary. Binary is ones and zeros. What if it's twos, ones, zeros, negative ones, negative twos? Sextents? Um, but it's pretty simple, isn't it? It's pretty simple. It's great, but it's simple. And since we're using vastly more uh, powerful processes, well, even the servers and the everything about it is 1,000 times more powerful. Um, we can do a lot better. Okay, we can do a lot, and so kind of like this, we'll have a beginning version that's much more complicated. But I think as I like this, as I use it myself and as I analyze it myself, and as I think about the data, not just as an economist, but as an investor and a trader, I can learn the strengths and weaknesses and adapt it to suit our needs. You know, and so for example, okay, very bullish. I think we understand. Okay, it's a 12. Great. What does this zero mean? And the trend or the seasonality, like, okay, I think we believe we know, but it's just not very detailed. And so and then you have to say, well, and what about that over time? So now you got to change the page. Or, and I think we were looking at USD CAD, right? So then you'd go here and you'd have to get much more complicated. Here we are again. And you say, okay, so now this is our third page. Just get more detail on USD CAD. So what if we could just do it all at once? And instead of you trying to figure out like, okay, CPI-A versus CPI-B, like what does that mean? Here's the forecast, here's the change. Did it beat or did it miss? And the seasonality. Okay, I get it. It usually goes up and then somewhere around here down. Okay, I think I get that. And I think, yeah, okay. See the technicals here. I think I get this. But what if it just did that for you? Can just display all the relevant information and the stuff that's not relevant doesn't, and instead reports to you. Not just give you the data and like, good luck. What if we essentially give, right? We have the data internally for us, meaning TRADARS, right? To report to you a strategic plan. So, as a subscriber, are you paying to have the data? Yeah. Or are you paying to have the strategic analytics of what the data means? Both fundamentally, technically, monetarily, like monetary policy, statistically, flows and capitals and seasonality, like all of it, right? Do you want just access to the data or do you want access to the strategic plans? Yeah, that's cool, right? It's a much different thought process. I'd be like, okay, great, Wayne, I got all this. What does it mean? Well, what if that was answered every everywhere, and you didn't have 3 pages, you just had 1 page, because there are no pages. Yeah. So like this gets really interesting, the seasonality. This could be a lot better. It's great. This is amazing. It's going to get a lot better. So that's what we have. Yeah. So we're in this sort of peak and valley period, yeah, which we saw before. It'll look different on the other chart because we have to count on this view for what actually happened this year. And there, with this big drop, skews it, right? So now there's a skew to the -4.5, and so now it changes the display to fit that in there. So this doesn't look as peaky as it did on the other one, but it is. This is a peak period, and then all we can say is somewhere around here it rolls over. So once again, Traders 2.0, we'll just use words to tell you, and it'll analyze all the data and try to tell you just with words when these peaks and valleys tend to occur. So it'll tell you, so we're in October, right? So it'll tell you the seasonal trends for October, but it'll help you also prepare for November now and try to show you the historic peaks and valleys of flows for USD CAD in the month of October and into the month of November and December with projections into the future. To say, hey, yeah, you should be a bullish here, but somewhere in October to November it turns bearish. Let's try to break down when that occurs and how many times it did occur in that week. And then I'll show you my confidence level of this going from bullish to neutral to bearish. Oh my gosh, that's crazy. I know. Yeah. I think I built the best analytical tool for traders and investors ever. And I'm not exaggerating. I think we're by far, the Bloomberg terminal stupid. I think we're like, I don't know if we can call it. Now AI doesn't even sound like the right way of calling it. Like AI is hyped, right? Like this is like a neuro. We built a trading brain, and I'm feeding it data from more than a dozen um, government agencies. And it's just sucking all this information in, but it thinks. I mean, we have a brain. We have a PhD economist. It still does pattern recognition, but it also now does technical analysis. So when we go to technicals, I tell you every day, this is not technical analysis, this is pattern recognition. Yeah, that is true. And we will continue with this because I love pattern recognition. Love it. But I also taught the large language model how to trade technically. And you might find all this confusing. You're like, I don't understand these large language models. Like you hear the name, but you're like, what does that mean? You know what it means? I had to sit down with it like a student and teach it pivot point theory, teach it moving average theory, teaching it oscillator theories with my settings, not everyone else's settings, and say and teach it and how to do multiple time frame analysis of all these things. So I taught it daily pivots and weekly pivots and monthly pivots and annual pivots, the 5 minute, the 15 minute, the 1 hour, the 4 hour, the daily, the weekly. Like I taught it how to trade. So now when you say something like, hey, what do you think about euro dollar? Should I be bullish or bearish? Or maybe I should be neutral. What do you think? It does that in its brain. So it's not just doing economic analysis. It's actually doing technical analysis too inside of its brain. So it could say, well, if you look at this chart, and if you look at the yield, if you do yield curve analysis of the 210 spread, the steepness of the yield curve suggests dollar weakness. So that would lean toward euro dollar up. You're like, so it's not just looking at the pattern, it's also doing yield curve analysis, technical analysis, economic analysis, understands monetary policy, create your bias. Whoa. I think I wore you out. I think I wore myself out. So I got to go keep plugging away to get this all hooked up. Basically, I'm just testing and then hooking it all up. So none of what I just said today is a dream. It actually is a lie. I, yeah, it worked. The testing is the testing of the AI hooked up to our memberships, now called subscriptions. Okay. So it's that communication that I need to test. So, does Andrew and Jim and Lucas and Sebastian Acosta, do they all have the right level of access? because the way it used to work is like this technical page, traders.com/products/technical analysis or technical hyphen radars. The way it works now is, do you have permission to see this? Jim does. Allow Jim to see it. Sebastian doesn't. Don't allow Sebastian onto this page. We don't do that anymore. So now when Jim goes into TRADARS 2.0, it'll generate content specifically for Jim and Jim's access level. And then Lucas will log in. There's no pages. So if Lucas has a different membership level than Jim, it'll produce different content for Lucas. And if Sebastian doesn't have a membership at all, it'll generate a different experience. So it's not HTML. So anyways, I got to get to work so I can get this done, then take a nap, and then go to police academy again. Oh, where's my Ritalin? I need some Ritalin. Yeah. Oh my God. I'm excited for us. I really am. This is a game changer. I hope you know that. And this is 2.0 is only 2.0. I think we can make 2.0 bigger and more powerful and more stronger. And I would like, by the end of the year, let's say in January, I would like to start building 3.0. What if we were 100 years in the future? What would data analytics and and trading strategy look like 100 years? And let's build it in 2026. Yeah. You see? Extraordinary. And I'm glad you're on this journey with me, because we're doing this together. And I'm building this for myself. There's no doubt about it. But when I'm out there at 3 o'clock in the morning with a full pot of coffee on a Sunday, I barely left the house. I don't think I even left the house. I feel like I'm on a mission for you. And that's what drives me. There were multiple times yesterday I wanted to just quit. I'm like, dude, it's 10 o'clock at night. Put in 12 hours straight. No, I gotta keep going. I gotta keep going. And I'm doing that for you. And you inspire me to just keep grinding, get her done, get it done. And I think together we're doing something revolutionary and extraordinary. And I think it's going to get better because of you and me. Tell me what you think. Tell me what you need. And we could probably get that. Our biggest challenge is our limited minds of being sort of doing what people have always done. It's hard to think about a process that's never been done. So we only know how to do our analysis and make trading decisions the way we've been taught or the way we've been doing it. So I dare you to dream, and we'll make that a reality together. Thank you for your patience with me. I appreciate it. Yeah. Peace on earth. May the pips be with you. May your profits be above average.